This video is sponsored by Gate.io. If you set an account up using the link in the description, you'll get 25% back on all your spot and futures fees for life. Gate.io. Hello everybody, welcome back, good morning. Let's have a bit of a work through the Forex situation first. So, still looking for a little bit more upside on Dixie, tiny bit. We're looking at this on the weekly, you can see the support on the descending trend line then. And also above all the moving averages of significance on the daily here. Look, I was looking at the yen previous to the big pullback that we got on the Dixie, so helped to navigate the top on this one. And you can see the Dixie versus the dollar yen. Dollar yen's way stronger as far as showing the strength of the dollar versus the weakness of the yen. Now, we do have one big drive of bearish divergence. You could do with maybe another one before that and maybe even another one after that. I don't see this peaking beyond its previous high, although obviously there's still a fair bit to go. But whatever it is doing, it's continuing up with its trend. Now, also, if we like to look at the euro, we can see that the euro has almost found itself down at the 200 simple and exponential, where you'd expect to see a decent bounce. 1, 2, 3 drives of hidden bullish divergence might be all it takes to see a decent bounce from there. I'm not talking reversals here, I'm talking decent bounces. Now, obviously, we've been concerned about oil. Oil's got rejected at the 83, so that's good. And it is heading down towards possibly a 200 exponential, where there will be a golden cross form probably this week. Or the simple moving averages, which have just formed a golden cross. So that is down here at $75 to $76. This is $77 to $78. So oil does look like it wants to have a bounce, but we'll see about all that. So long story short, we can basically look at the Dixie, and the Dixie wants to maybe even retest these areas down here, maybe even a little pullback back into the range, but still a decent uptrend, no divergences, nothing like that. So we'll continue with this rally, I would expect, with the pump signal as well. So any pullback on the dollar is likely to get bought back up. But that's not necessarily a bad thing for everything else. Now, the stocks, I'm sure everybody's seen, Michael Berry's shorting the stock market. Well, fair enough. There's a reason that you might want to do that. You can short it. He's already shorted it. He believes that the what do they call it? The Magnificent Seven, the top tech stocks have run out of steam, and they may have. You think about some of these top tech stocks. Yeah, they've been the best performing of all the things that I've got. I remember buying Meta when it was just creeping above $100. You know, all these tech stocks have done pretty well. So yeah, of course, consolidation is required. But when we hear the word Michael Berry, everybody thinks crash, don't they? And I don't really particularly see a crash unless oil start, and even this won't be a crash, but I don't see a significant long-lasting downtrend unless we see oil above 83, which would then filter through into a higher CPI, higher inflation, then the Fed might have to ramp it up once again. Right, so all of that is out of the way now. Let's talk about Bitcoin. So Bitcoin getting bought back up again down into the 25,000s. Yesterday dipped all the way down to 25,300. I've been saying, look, as far as the supports are concerned, they've kind of not really touched the sides. But when it comes to volume, we do recognise that between $15,000 and $25,000, the volume has been extremely high. This is where the smart money came in this cycle. And so if we start to dip our toes below 25,000, we're back into the smart money area. And with that comes probably the best opportunity to wind the clock back to join the whales between the 15 and 25,000. That doesn't mean it's going to come down to 15. That's not what I'm saying. It could, of course, if there's a black swan, of course it could, and we should be buying it if that is the case. But yeah, 15 to 25,000, the volume was high. Everybody was getting their foot in the door. Then anything above 25,000 kind of was like forced trades. Even though we did move up to 30,000, basically it was a forced trade. So we do have short signals on this. I'm like I say, I'm not looking for that major continuation down. If we look at this on the daily, we can see a rejection taking place already on the 7 simple moving average. That isn't actually like a massive big deal. Normally on the last stage of an uptrend or a downtrend, the 7 simple starts to become resistance or support. It's normally the last stage before we get a reversal. And I don't mean a massive reversal, I just mean like a big consolidation or a big dead cat bounce, and that's kind of what I'm looking for. Same as what I was saying yesterday. RSI quite low with divergence as well on the daily, which is pretty sweet, I have to say. That does bode well for a decent bounce. Bollinger Band's still pinching very tightly. Rejection on the 21 exponential. Any other moving average above us is either going to be the 50, which is up here at just short of 27,000, or the 200 exponential back up here at 28,500 or 400. Again, with divergences all the way. So still looking for the bounce that I was talking about yesterday with the max target of around 9%. And traditional markets do point to that direction as well. Might not be immediate, but that I think it's more likely that we see upside rather than downside. We've got the divergence on the 4-hourly and on the daily on Bitcoin, and yeah, I think when it comes to stock market, yeah, we could see pullbacks and stuff. This is why I was skeptical a few weeks ago when I heard that Bloomberg were calling for $5,000 on the S&P. I was thinking that's a crazy thing to say, but they said it all the same, and it did make me think, well, to be fair, it does look overheated anyway, and now obviously we're pulling back. But I don't think we'll be pulling back dramatically. I don't think it's going to be horrendous or chaotic or catastrophic. Yeah, Burry's got shorts on the market, no big deal, but there's plenty of support below us on the daily. Probably not likely to see areas lower than around 4,200, maybe even 4,000 could be the next level of support. This is a significant uptrend, and I would imagine it will remain an uptrend unless, of course, there are changes in the economic picture. So that would be anything from inflation to heated up geopolitical situations. But it doesn't look like this uptrend is ready to break down. It looks like it's just going to continue, and this is like another decent pullback as the first one or the second one, and now into the third one. Right, thanks for watching. I'll leave it with you there. Thank you, and have a nice day. Take it easy.